Welcome back to the Bitcoin Layer. I'm Nik Bhatia. Today we welcome Yaël Ossowski. He is a fellow at the Bitcoin Policy Institute, an organization that we are familiar with here at the Bitcoin Layer. Yaël, welcome to the program.
Thank you so much for having me.
Okay, let's talk about first Bitcoin and as it relates to the United States of America. I know this is a topic that you're passionate about. Before we get into Bitcoin regulation, the Bank Secrecy Act, and what we should be expecting from the United States to Bitcoin, talk first about how Bitcoin relates to the USA.
Yeah, so there have been some very astute people in government who've followed Bitcoin for a very long time. If you guys remember sort of the early debate on Bitcoin Talk Forum, there were mentions of people going to various agencies, and there were people from various agencies very interested in Bitcoin. But it first really came into pass around 2012 and 2013. So the IRS had issued guidance around Bitcoin and what exactly it meant for taxation. And then we finally got our kind of first guidance from the Department of Treasury through the Financial Crimes Enforcement Network, what we call FinCEN. And back then, Bitcoin was viewed as a virtual currency. That's how it was sort of implemented into law. This is guidance that's written by the Treasury Department, meaning the executive branch of the government. We didn't have anything yet from Congress, but we had something from the executive branch. And what this basically said is it looked at the difference between centralized virtual currencies and decentralized virtual currencies, and essentially made the point that there are certain circumstances where a virtual currency will be essentially a money service business, meaning you will have to comply with various portions of US banking and finance law, and then those that would not be. And the distinction that they made at that point in 2013 is that if you are a decentralized virtual currency and people have access to keys, cryptographic keys, and they are the sole owner, as long as nobody is shifting that money around on someone else's behalf, then that does not apply with any kind of regulations when it comes to KYC, AML, anything in the Bank Secrecy Act. So that really was the opening gambit for Bitcoin and regulation. Obviously, taxation is a bit different. The IRS has kind of seen this as sort of normal property that if you are to sell it, then you would have to pay the capital gains tax on that. There have been different states that have had different areas of law around that, particularly taxation. But for the purpose of federal regulation, and particularly finance and banking, it goes back to that. So that is just the sort of network itself. And then any cryptocurrency exchanges and brokerages, which came later, those were essentially categorized in law as money service businesses, meaning that they need to file reports on any suspicious activity. They need to be sure that they have their records that are kept somewhere where government agents could either get access either through a warrant or through the suspicious activity report process. But either way, there is a way that you can regulate Bitcoin and cryptocurrency exchanges, and then there are ways that the protocol itself is regulated or not regulated in this case.
The Bitcoin Layer is sponsored by Unchained, the undisputed leader in Bitcoin financial services. Unchained empowers you to take full control of your Bitcoin with collaborative multi-sig vaults, in which you own 2 of 3 keys and you gain a Bitcoin security partner. You can purchase Bitcoin directly into your cold storage via Unchained's trading desk and eliminate all exchange risks. Unchained also offers the best IRA in the industry, where you can convert your existing 401ks or retirement accounts to Unchained, all while keeping control of your Bitcoin private keys. Don't pay more in taxes than you have to. Talk to Unchained today. Go to unchained.com/TBL for $100 off when you sign up. And specifically about the emotional relationship of Bitcoin and the US. We know that the executive branch came in right away and set forth this important distinction about Bitcoin. The IRS was second to rule that it's subject to capital gains. We've had a lot more regulation come down and more to come for sure. But what about the unique position of the United States as a liberty embracing nation, the Constitution? What are the parallels between Bitcoin and the origins of the US?
Yeah, one thing that I find very interesting that is very unique to the United States, and you have listeners obviously who are all over the world, and I myself have lived in Europe a good amount of time and in Canada. There's just something in the American project that really bestows property rights and freedom of speech in a way that no other system can. And it's sort of been a natural breeding ground for Bitcoin. There's been a lot of great stuff for Bitcoin in places like the Czech Republic and Germany, for example, a lot of great things happening in the Middle East. But where you've really allowed it to shine is in a place like the United States. And having entrepreneurs who are coming up with solutions using various parts of the code, all types of different protocols, they've been able to actually establish things that really the law in itself, as it is written, can't really recognize. And I think that's kind of the issue that we're seeing with many of the different court cases of people who are either like Samurai Wallet, who have been arrested and are currently going through a large process. We don't really have the way in law yet to figure out how to understand Bitcoin. We have a lot of talk about tokenization and tokens and securities. We don't really have an idea about how to handle code, and particularly decentralized code that anyone can run. So I think the American model, whereas code as speech, actually does a very good job in doing that. And there's been many other papers written by people who are working on these issues, also in the DeFi space, that essentially blockchains and open blockchains like Bitcoin that are decentralized, that don't have an owner or a company, they are tantamount to speech and therefore should be protected, particularly with the First Amendment, as we have in the United States, which is not, again, a right that you have. It's just a right that the government will not infringe upon your speech. And what we're seeing with some of these cases where people are kind of being thrown behind bars for some of their Bitcoin activity, that would be an abridgment of the First Amendment. So we'll see how that plays out in the courts and over time and over interpretations. But I do think the American system has been pretty open to Bitcoin thus far, and I hope it'll continue to be going forward.
Will we see a recall of the cases of Phil Zimmerman and the Bernstein case as well in these upcoming Bitcoin cases?
I definitely think so. So my colleague Zach Shapiro at Bitcoin Policy Institute has kind of made that we're kind of in the crypto wars 2.0. And you've had during the Biden administration many different circumstances where you can tell they don't necessarily understand the technology, but they know that they need to find a scapegoat. And for their case, this is Tornado Cash, this is Samurai Wallet. They were able to go after people who are boasting and online and very loud and proud. But there are tons of users of Bitcoin that are using all types of different protocols, all types of different projects, and they're doing that non-custodially, where they keep their own keys. We're not even talking about any Lightning wallets. We're not talking about eCash. We're not talking about Fedimint, anything like that. We're just talking about people using these ordinary projects. And I think we are going to see a kind of revision when it comes to encryption, when it comes to these cryptographic protocols, when it comes to cryptocurrencies generally. It's really been in the administration of Biden, the FBI, the director Christopher Wray, when he was first selected, and he was in there, he would actually talk to Congress about why we need to ban things like end-to-end encryption. It was making the FBI's job much harder because people are using encrypted messaging apps. But now they've actually come around, and this just happened in the last 2 weeks. The FBI is now recommending that people use end-to-end encryption on all of their devices to save them from, let's say, Chinese hackers or spies. So I think it takes time for the government to understand why this technology is important and necessary. They see it with encryption. They saw it through the crypto wars. Now it's just, are we going to be able to do that when we apply it to money and value and people who have alternative savings in something called Bitcoin that they can use without intermediaries?
It's a phenomenal point about the lag in government policy. People, if they are interested in the crypto wars, they should go check out perhaps the book Crypto by Steve Levy, who wrote a great account of what went on during that original battle between the private enterprise of cryptography and the government, specifically the NSA, was trying to stop its monopoly over cryptography from being broken up. What about the Fourth Amendment? Because you mentioned the first, but a few of these cases have to do with privacy. So, what about the Fourth Amendment?
Yeah, I mean, I think we're very lucky in this age, and I know not everyone pays attention to the Supreme Court or to Supreme Court cases. There have been, in this kind of current setting of the Supreme Court, a lot of very pivotal cases when it comes to the Fourth Amendment, when it comes to the First Amendment. And there's been a kind of inkling from one particular justice, Neil Gorsuch, who is a libertarian, someone who's definitely been on the more private property side, free speech side on many issues. And he's talked about the need to get rid of the third party doctrine. This was brought up in something called the Carpenter case, and it goes back to the 60s and 70s. The idea is that you, as a consumer, if you give your private data, your information to some third party, essentially you have no expectation of privacy anymore because you've given that data to someone else. That is the principle that the courts kind of devised for why police officers and law enforcement, if they wanted your data, they didn't have to go to you to get it. Because you already divulged it to a third party, they could just get it easier there and they wouldn't need a warrant. And this has been challenged in many different cases. The latest case that I mentioned, the Carpenter case, what Neil Gorsuch did is he said, hey, if you guys come to me with the right arguments, we can actually strike this down and give people their original privacy so that even if you are disclosing your private information, your Lightning address, your node ID, for example, if you're giving that to a third party to pay an invoice, for example, that doesn't mean that all of a sudden police or IRS or any other agency of the government can therefore go to that other entity and get that information without a warrant. It actually means it's your data, it's your information, it's actually personal property, and you have rights to it. And the Fourth Amendment applies even if you enter into a contract for people to take it. So it's a lot of legalese, but that to say that there are provisions in law that already exist that is really part of the legal conversation to where the Fourth Amendment could apply to many of our different transactions on chain. I'm very excited by many of the protocols and people who are coming up with things like silent payments or people who are using Lightning invoices, all kinds of swaps. There's a lot of things that people are doing on the technical side, but on the legal side as well, we should be protected in that. We should be basically protected from unreasonable search and seizure as the text of the Fourth Amendment applies. We just don't have the perfect case. Could this be something in the case of Samurai? Likely not, but there could be other cases down the line where this could be revised. And it might be a way that we could, as Bitcoin users, actually affirm the rights that we already have.
When we started this channel, we didn't think we would be spending so much time on the legal intricacies, but here we are. We've done several episodes on Bitcoin legal topics themselves. We've had lawyers on, and the First Amendment, speech, and then we get into property and search and seizure around the Fourth Amendment. They're embedded, or Bitcoin's core tenets are embedded within the First and the Fourth Amendment of the United States Constitution, making United States a perfect home for Bitcoin activity. It doesn't mean it's the capital of the Bitcoin world, but from a regulatory, a leadership perspective, and of course now an ownership and a corporate perspective with publicly traded companies, publicly regulated ETFs, it is becoming the home of Bitcoin for sure. So a topic that we want to keep going into the details because they are important. Let's talk now about, go ahead, Yael.
Well, obviously, Bitcoin is meant to be peer-to-peer and decentralized, and I have humming computers in my room because I'm running nodes, and that was always the intention. It's what it's supposed to be. It's a strength that it has. But you're right that the fact that many of these debates are happening in the U.S. from a pure soft power perspective are important because other countries are just basically waiting for the U.S. to at least make some kind of case, have some kind of law that they can kind of easily copy into their countries. We surely don't want to have anything from dictatorial regimes because we know exactly what they would do with Bitcoin. But there are some pocket cases. I mentioned the Czech Republic before, which is also a kind of home of Bitcoin. You've had a lot of innovation there. So they just actually passed a bill, I believe last week, that if you hold your Bitcoin for over 3 years, you're exempt from capital gains tax. It's actually pretty interesting. There's all kinds of small things in Dubai that's also happening when it comes to Bitcoin and cryptocurrencies. El Salvador, they've done the legal tender thing. We haven't really seen the legal innovation, and even parts of that are kind of currently being shredded a bit because of the new IMF agreement, which I learned in your newsletter. So thank you for that. But yeah, I just want to be sure to iterate that point.
Absolutely. So let's get into the Bank Secrecy Act now. Give people a background without going into Bitcoin yet.
So in the 19 and late, let's say 1960s, 1970s, you had a lot of organized crime that was happening throughout the United States. You had different actors that were using the banking system to basically openly put the proceeds from their criminal activities into bank accounts. And there really wasn't a robust system that was set up yet to figure out how do we deal with criminals doing this. And if you remember sort of the case, going back to Al Capone, the reason he actually got caught was because of a tax thing. So we can do it maybe with taxes at the end of the year if people don't declare something. So at that point, the Congress decided to devise something called the Bank Secrecy Act, which is not about bank secrecy, it's about bank openness. And it basically created a procedure whereby banks would be held accountable if they allowed some kind of criminal activity that they knew about to take place. So it set up this system to where when people would make transactions that would be over a certain amount, over $10,000 in 1970, they would have to file something called a suspicious activity report. That's a report that would go to the Treasury Department, to FinCEN, and they'd be able to look at that and they say, okay, who's person A sending the money, who's person B, and is there perhaps some kind of illegal activity tied to this? So there's that threshold amount of $10,000, and then there's also just the suspicion of wrongdoing. And what this did is it deputized the banks. It made the banks responsible for what people were doing with their bank accounts for the first time, and it gave them liability. And that meant that people were more prone to being debanked or to losing their accounts because the banks wanted to what they call offload or what we call debank. And that really started in 1970, Bank Secrecy Act. It ramped up with the Patriot Act, and then it ramped up again about 15, 20 years ago, where they've, again, constantly changed this. But again, that flat number of $10,000 has never changed, despite the inflation, despite how much it'd be worth today. And we're just talking about normal financial institutions. We're not talking about money service businesses, which have an even lower threshold of sometimes between $2,000 or $3,000. So anything that's sent over Western Union that's over $2,500 or through a custodial wallet, technically that entity would have to file some kind of suspicious activity report. That's kind of the status quo and the background right now of the banking system.
So before we get to Bitcoin, once again, where does the Bank Secrecy Act go wrong? What are some of the worst implications that we've seen, and how are banks treating people that, what are some of the ways that we can fix the individual regulation before we get into repealing it?
So we've had a lot of anecdotes over the years about how Bank Secrecy Act has hurt people, but we were really in this kind of advocacy movement handed a gift just last week. So the House Weaponization Committee, that's part of the Committee of the Judiciary, that's in the House of Representatives in Congress, they came out with a report on financial surveillance. And they show exactly how the Bank Secrecy Act has been used and abused by federal agencies, and not just FBI and IRS, but so many other agencies in the government. And what they've kind of shown is that they've used the suspicious activity reports where you make any transaction above $10,000 if you're using a bank or $2,000 if you're using a money service business. And they've basically created these databases. And these databases are ways that law enforcement can go directly look at this huge database. Imagine it's like an Excel sheet of all the transactions that have been filed. Okay, they've got this search database. Even worse than that is that many times the law enforcement agents would go to the banks and say to Bank of America, for instance, hey, we need all the reports. It'd be really helpful if we were able to have all the money that people spent around, January 7th in Washington, D.C., maybe January 5th, January 6th in that area. Were they buying stuff at Walgreens? Any of those transactions, if you're able to list those, it'd be really helpful. They're not allowed to do that themselves and as the law enforcement agents, because it would be against the Fourth Amendment. They don't have a warrant, but they can pressure banks and financial institutions to report that information. So what the House Weaponization Committee showed is that many of these banks just they fell down and they complied. Bank of America, for instance, gave every single transaction that was made in Washington, D.C. between the days of January 5th and January 8th. So anyone who was there for January 6th, and they had every transaction. Doesn't matter if people were at CVS or Walgreens or they're at a bar or a restaurant, they have all of those. And then they were able to cross reference with people who might have been at the rally or at the Capitol. And what the committee showed is that none of this is really legal because you're not supposed to have access to this information just willy-nilly from a database. So that is one example. There have been many more. There's been a lot of the crypto debanking talk as well, to where if someone has, let's say, my name, I have 50 suspicious activity reports to my name, then I'm obviously a risk. So if they always have to file for me because I buy Bitcoin from River or Coinbase or anything else, then I'm put on a list. I'm too much risk. They don't want to deal with it. That means that I get off banked. And essentially that's what's been happening with the Bank Secrecy Act. Is there's been a lot of pressure from government agencies to provide more information from the banks. And the banks, because they're so scared, are just giving that information willingly. All of that is going around the process that we have in the US to get a judicial warrant before you get that financial information. So it's been a lot of what we call jawboning, pressure from these government institutions to do this thing. It was the same with social media. The Biden administration talking to Twitter, as we learned in the Twitter files, and to Facebook. Can you please suspend XY account who's talking about COVID, or RFK who's talking about X or Y vaccines? That's the kind of stuff that, unfortunately, we've allowed to happen, and we haven't really had a process that's been adjudicated to solve how we can stop that in the future.
It's interesting that the censorship of social media and the Bank Secrecy Act are so closely tied in the way that the government is using them. Yael, you describe the Bank Secrecy Act as a dragnet. Can you reiterate some of what you just said with that term? Because I know that you've described it somewhat already.
So the dragnet is the idea that you cast a super wide net of transactions or peoples. And that's what the Bank Secrecy Act allows through these reports, is that they allow that essentially if a government agency comes to a bank, whether it be your community bank or a large bank like Bank of America or JP Morgan, they can go to them and say, hey, we want to have everyone who spent over $2,000 on Coinbase between these days because we think that's tied to some crime. And they don't need access to any warrant. They just kind of ask them, it's like, would you guys mind filing a report? And what they do is the banks, feeling the pressure, put that information into their big supercomputer that's shared with the government. And it casts this wide net of all of these people who haven't done anything wrong. They've done nothing suspicious, but it's just that they've been pressured to query that information. And that database does not just go to Treasury. As we learned from the House Weaponization Committee, that database is actually accessible by at least 18,000 different contractors who work with the federal government or who are employed directly by the federal government, meaning it's ripe for abuse. It's ripe to be used by a jealous ex-partner, by some kind of ex-business partner, or someone who might not like your political stance or might not like that you're messing with Bitcoin. And that's what they've kind of done, is they've cast this wide net to where any normal activity, buying a car, buying a boat, if you do it over a certain amount, or if it's to the wrong person, it gets put on a list and fed directly to the government. And that means that general stuff that is just normal, paying your rent, paying your tuition, if the circumstances of that are suspicious according to the bank, and they have plenty of reason to actually file more than they probably should, that means that there's going to be this huge wide net of people who are caught up in this financial surveillance regime, who are just ordinary people buying things.
It's obscene to think about. Now, you suggest the Savings Privacy Act as a potential solution. So get into this, describe it. What are the challenges, and what's the hope there?
So basically, we've tried to talk about this just from activist perspective. There have been many different legal experts, people who look at financial privacy, people like the Cato Institute. For years and years, they've looked at, well, here are some small reforms that we could kind of do. This is some way that we could maybe increase that threshold of the Bank Secrecy Act, tie it to inflation. And we haven't really had a kind of silver bullet solution to figure this out yet. And thankfully, we do have one now. Senator Mike Lee filed last year, and then he did it again this year, something called the Saving Privacy Act. So it's been co sponsored as well by Rick Scott. And what this does is it actually completely eliminates this threshold and the suspicious activity reports altogether, meaning that any of the banks, financial institutions, Bitcoin brokerages, exchanges, they're still required to keep information, but they're only allowed to give it out if police agencies come to them with a judicial warrant. And they can only get a warrant if there's a certain threshold. Now, that is something that we have not had in this country for many, many years, and would actually be the largest reform that we can have with Bank Secrecy Act. So that's the Saving Privacy Act. It has many other divisions that are really important. Getting rid of the Corporate Transparency Act, which basically everyone had to file their beneficial owner information to FinCEN. There's actually a ban on any central bank digital currency as well in this bill. And there's other areas where they essentially stop the government from getting access to financial information without a warrant. So this, I believe, is the largest package that we have available to us that is popular, that has been endorsed by right now 2 big senators with power in the sort of MAGA universe. And there's actually a lot of momentum. So many of us have been talking to different congressional offices. We've been talking about this in media, writing articles about it. This is, I think, a very good directional way to talk about reforming the Bank Secrecy Act that would ultimately help Bitcoin, that would help exchanges, that would help custodial projects, and really fortify non-custodial projects so that we can keep Bitcoin decentralized and peer-to-peer. So I'm very excited about that. I don't say that often about legislation in my line of work, but it is something that I think addresses all of these points and make sure that we go back to the American system of respecting the Fourth Amendment, of respecting the fact that police and the government needs a warrant in order to access your personal and private financial information.
We do believe that deregulation has one of the largest potentials to move the country forward. So we'll be watching that closely. I want to ask you about the cutting edge of Bitcoin privacy court cases right now. Tornado, Samurai. Could you discuss these cases? Where are we in them? What are the challenges? Is the outlook optimistic or pessimistic?
Yeah, I mean the American court system is again one of the best in the world, I would argue, and we have very astute judges who understand things, but it's a very complicated process. And because the Constitution requires that the government have a lot of burden of proof that you did something wrong or something illegal, it means that these processes are very complicated. For Tornado Cash, I think what's important for Bitcoiners to know is that essentially they ruled that you cannot have Tornado Cash or any smart contract be sanctioned by something like OFAC, which is, again, another department of the Treasury. And this basically looks at the different transactions, actors, protocols, projects that are flagged and have to be blocked in any kind of financial transaction, and also requires entities that would interact with that person to essentially have a red flag, alert the authorities. So they've said that this is a recent judge that said this, that they're not able to offer that red flag on a smart contract, meaning code. So that's kind of what we have for Tornado Cash. Some of the other elements, because they bundle up these cases with various charges, they really hinge on whether non-custodial projects are required to have a money transmission license. So are they money service businesses, as we mentioned before? And all of the guidance that we have beginning in 2013 is that if you don't touch anyone's keys, you don't transmit money on their behalf, you just offer them code, then you are not a money transmitter. And that's what's happened to Samurai Wallet. Is they are being charged with conspiracy to commit money laundering as one, and then conspiracy to not have a money service license. So That second point is very important when we talk about the development of projects like Cashew or Fedimint, eCash, when we talk about Lightning wallets, custodial wallets, browser wallets for Nostr. There are all of these different cases where we are temporarily exchanging keys for some kind of use of the Bitcoin network. And if people are actually doing transactions on your behalf, or are they not doing it? This is the question that's brought up by the case. It's strange that the FBI and the police went after Samurai Wallet using this charge, because technically that is the FinCEN guidance that if you don't have the keys, it's a non-custodial transaction, not subject to get any licenses. But the government is trying to test that case and if a judge will approve it. So for now, we're still waiting on the different hearings. They're going through discovery right now on the Samurai Wallet case. There's many more updates that you can obviously read on the Peer-to-Peer Rights Fund, Zach Shapiro and BPI. They do a very good job of tracking that and also supporting the case with donations. So it's always on the cutting edge. We're probably going to have to wait about a year before we have any other developments in the case, because they're just going through the tons and tons and terabytes of data. But this stuff matters, and it matters for you in your ordinary life. Even if you just buy a little bit of Bitcoin every week, how you move your Bitcoin around and where you choose to store it, or how you choose to keep it safe, that's something that could change because of this court outcome. And I think is really important, at the forefront of fighting for financial privacy and fighting for the decentralization of the thing that we all love, Bitcoin.
Yaël, Ossowski from the Bitcoin Policy Institute, thank you so much for sharing your expertise on Bitcoin privacy, Bitcoin's relationship with the U.S. Constitution, and some of the court cases going on and legislation put forth on this topic. Please tell people where they can find your excellent work and your recent writings.
Yeah, sure. So I'm on X. I'm on Nostr, Yael, Yael. I'm very easy to find. I'm one of the only ones. And obviously, you can go to bitcoinpolicyinstitute.org there and see all the great work that my colleagues are doing, talking about the Bitcoin Act, strategic Bitcoin reserve, research on legal cases like this, and everything that we can do to fight for Bitcoin users.
It does appear as if 2025 is going to be a big year for Bitcoin policy. So we'll look forward to catching up with you next year and follow up on some of these topics. Thanks for joining us, and we'll catch you guys next time.